Hello and welcome to our weekly look ahead at the markets here. Just a quick recap, things over the last week calmed down significantly in the wake of the banking crisis and the Silicon Valley Bank, Signature Bank, Credit Suisse, all that shenanigans seems to be put to rest, or at least the worst of it. Rumbling concerns, of course, continue, but the market was a lot more calm last week. We saw also some repricing in the front end of the yields. US 2 years, moving up from around 3.38 to about 4.1 by the end of the week, and notching its biggest 4-day move in 7 weeks there. So just the market just coming back a bit more confident about Fed hikes, and I think really that's going to be the story. Is we've seen significant volatility in bond markets and repricing again for where they think the Fed's going to go. I think whilst the Fed has indicated that this banking crisis will see some credit tightening, I think that's for sure. The extent to which is a credit crunch, we're not sure about. But in the meantime, we could see higher inflation and resilient economic data suggesting that the Fed will need to move higher again. So we could see the front end reprice once again. And the Nonfarm payrolls, which are coming up on Friday, that's Good Friday. So European markets will be shut, but US remains open with those non-farm payrolls numbers. They're going to be key. I think that's going to be the big driver. And the market might just be bumbling along a bit range bound until that data gets released. Ahead of that, we have Reserve Bank of New Zealand that's expected to hike rates by 25 basis points, and ANZ Bank saying that a 50 basis point hike is more likely than a pause. So although the consensus very much market pricing are 90% towards that 25 basis point hike at the RBNZ. Across the water, the RBA meanwhile is expected to likely pause. That's after inflation cooled quite significantly, the latest data release showed. So I think probably with the commentary as well from the RBA last time, their last meeting in March, they signalled that a pause was likely as well. So with that inflation data coming down, we think that's the most likely outcome. Meanwhile, there's US ISM manufacturing and services PMIs. Remember, that manufacturing sector has been on a 4-month decline. That's after a 28 straight month expansion. So that's something to look out for. We get a further fifth month of declines. Also, prices paid jumped, so that inflation story is still playing out. So watch out for that one in the ISM manufacturing prices paid component. Otherwise, we're looking at what's happening with the banks, and we'll be teeing up the Q1 earnings season in due course as well. But a slightly shortened week in Europe with the Easter holidays coming up. And we wish you well for those, and happy Easter and good luck. Thanks for watching.